Okay, so when you look at FIFO, the method that we are applying is basically dependent on, that the stock that has been there in the store for the longest time possible is what we take out first. That is the stock which is being taken out first. Then from there, we now look for any other stock which is remaining in case the issuing is more than what was there initially. So that is what we consider. So the first thing that we now do, let's all of us have the format here. Let's all of us have the format. Let's all of us have the format here. So for this format, we are supposed to have the date. We are supposed to have the date column. Then we are going to move to the receipts. We are going to deal with the receipts here. We are going to deal with the receipts. And these receipts here, we have to indicate the 3 columns. So our first column under receipts, will be units. Then we have cost per unit, then amount. We'll indicate also units here, cost per unit, then amount. Then we are also going to have units, cost per unit, then amount. So that is what we are going to have. That is what we are going to have for all of them. Let's say we can have something of that kind. That is what we are going to have. So we indicate receipts, then we have issues, then we have issues, then we are going to have balance. So there we are going to have date. Here we have units or quantity, price, amount, quantity, price, amount, quantity, price, amount. Don't forget the method. We were applying FIFO. So that is what we need to put in place. So let's all of us have this format. Let's all of us have this format before we now proceed to getting the solutions. Do we all have that format now with us? Do we all have that format with us? Do we have the format with us? Let's have the format. Let's have the format. Let's have the format. Let's have the format here with us. So once you have this format, I think we can now proceed. Somebody is interfering with us here. Okay. So if you look at that question, the first one, we have to look for the opening stock. And yesterday we said the opening stock can be the stock of last day of the previous period or previous month. And then you can also be told that basically this is the opening stock of the current period. So if you look at our question, additional information number 1 is telling us that opening stock or the stock as at 31st of the previous month, which is January, is 300 units at 500 shillings per unit. And remember, we are preparing the information for which month? We are preparing information for the month of February. So we basically indicate February. Once you're done with that, you just indicate the first date. So that's the first date of our February. which we have opening stock. This opening stock, we are told, is 300 units at 500. So 300 units at 500, we are going to have our 15. We are going to have our 150,000. That is the opening stock. This opening stock, we need to transfer it. Even if there is issuing of goods or receipts of goods on the 1st of February, first of all, deal with them one by one. So we complete the transaction of the opening stock, which will remain to be 300 units at 500, though the other ones we are not going to indicate, and I will tell you the reason why we don't indicate the prices at this point. Then the next thing on 4th, that's the next date, we are being told that they received goods. How many units? 400. 400 units. They are receiving 400 units at 565. They are receiving 400 at 565. So what is the value here? What is the value? What is the value there? 400 by 565. 400 by 565. What are we getting? What are we getting? These things we did yesterday, so it is a matter of copying. What did we indicate here yesterday? What are we supposed to have? 220,000. So that is what they received. They are receiving 400 units and they already have 300. So the balance is 700. And we add this to 20 to 150, which gave us 370,000. The reason why we are not going to indicate the price here, you do not know which price to indicate. Out of this 700, 300 was brought in at 500. Then 400 has been brought in at 565. So are we going to indicate? Are we going to indicate? I'm being told about something here. Yes, the 400 was brought in at 550. It was brought in at 550. Yes. Now, they were brought in at 550. These ones were brought in at 500. So which price are you going to indicate here? That's why we don't indicate the price. But for the weighted average method, you have to indicate, because it is this price that you are going to use to do the issuing of goods, if there is any in the subsequent dates. Now, are we able, still this one here we can identify, because for us to arrive at 370, we've taken 300 units at 500, we've added to 400 units at 550. When I add these things here, they should give me a total of 370,000. So if this was the last date of preparing this stock ledger, then it means the value of my inventory could have been 370,000, and in terms of units, I could have been having 700. That is what is here. So this one here is 150,000, and this one here is 220,000, giving me that. Let's now proceed to the next date. From 4th, the immediate date there is 8th. What is happening on 8th? We are being told that goods have been issued on 8th. Of what units? 550. So these 550 units, we have to comply with the method. We will keep on referring to the method that we are using in this particular question. We are taking away 550 goods or units. This 550, the goods that have been here for the longest time possible, is the opening stock. So this opening stock cannot give us the entire 550 units at once. So it means if you're going to issue, we first of all take away the 300 units which were brought in at 500. Then we have a deficit. For us to make it to 550 units, we are still lacking 250. This 250 is now what we are picking from the stock. We've taken those ones that have been there for the longest time possible, but cannot give us 550 at once. So we have now to take the remaining balance from what is here, and at what price? At 550. So 250 by 550. What are we getting here? 250 by 550. We are getting 137,500. 137,500. So let's now get the total. I'm now taking away the 550, which I've been told about. And then in terms of value, how many or how much am I taking away? How much am I taking away? 287,500. 287,500. That's what I'm taking away. So for me to get the balance as at that date, for me to get the balance as at this date here, the 8th, then it means I'm going to deal with these goods that have been taken out. In terms of units, I've taken 550 from 700. So how many units am I remaining with? I think I should be remaining with 150 in terms of units. How about in terms of amount or the value? I'll be taking 370,000 minus 287,500. So what are we getting here? What are we getting there? 82,500. 82,500. Can we prove? Can we prove that it is 82,500? Yes. This 300, I've removed all of it. It has been taken away. So any stock that will be remaining here is this batch, the one that was brought in on 4th. These ones that were brought in on 4th, I've taken away 250. So it means whatever is remaining is 150. And they were brought in at what price? At 550. Can you take your 150? Because that is what we are having. We are add 400, we've taken 250. The balance is 150. And we multiply by the price that was used to bring them in by 550. Tell me, what are you getting? 150 by 550. 150 by 550. What are we getting? 82,500. So the 150, that is units, is what we have here. Then the value 82,500 is what we have here. So we've now confirmed. Now for you to be safe, you can be having a pencil somewhere. We know now that these goods that were brought in on 4th, we still have 100 units. Sorry, 150. We still have 150 units unused. They are still there in our store. So you write this one using a pencil somewhere there. Then we now proceed to the next date. From 8th, we now move to 10th. They brought in 500 at 565. On 10th, they are bringing in 500 at 565. So what is the value? They are bringing in 500 at 565. What is the value? 282,500. 282,500. So when they bring in 282,500, in terms of value, we add it to the value of what is already in our store, which is 82,500. Then in terms of units, we add 150. That is what was there as the closing on 8th. Then when we come to 10th, we are adding 500. So it means the current units is now 650. But what is the value? 650 is the value, or is the units, and then the value will be 282,500 plus 82,500. What are we getting? We are getting 365. We are getting 365,000. Now, next date from 10th. From 10th, we are supposed to move to, we have 15th, we have 17th. So 15th is the next. Now here we know very well, we've added 500, which has not been touched. You indicate it somewhere there with a pencil, because we are interested in the price here. This amount will help us to know what we are taking out. Now on 15th, I'm able to see they brought in 300 goods or units at 575. So when you bring in 300 at 575, what is the value? 172,500. That is what we have. 172,500, we are bringing in, those are receipts. So what do? We add it to this one here to get the value. And for the units, we take 300 plus 650 to give us 950. 950 in terms of units, and in terms of value, so I know very well I've added 300. In terms of value, 537,500. 537,500. Up to that point, somebody may need to prove that how am I getting this 537,500? Out of this 950, 300 units were brought in at 575. 500 units were brought in at 565. Then 150 units were brought in at 550. If I add these ones here, it is 650 plus 300, 950. And that is what my stock ledger is telling me. This one here is not part of the question, but if you use your pencil to indicate these quantities here, you will not miss anything in this question. Now, next date, from 15th, we are moving to 17th. What's happening on 17th? They are issuing goods. How many units? 850. Now, that person who is doing this, that person who is indicating this, you do not even need to come and start tracing these things back. No, you know very well you need 850 units. That is what you want to issue. So I come here on 17 and pick the units that has not been touched. This one here has been there from 4th. So I start with the one that has been here for the longest time possible. That is what my formula is telling me. So I come to those ones that were brought in on 4th, the 150 units, they were brought in at 550. Then, which is 82,500, as I can see. I come to this one. Remember, the total that I need is 850. I come to this one here, 500, that were brought in at 565. So the value is 282,500. I come to these goods that were brought in on 15th, because I've taken this one here, is now not there. This one here has been consumed. I'm remaining with this 300. But remember, my total is 850. This one here just gives me 650. So I need to add, I need to top up to get the actual amount of 850. So what am I going to add here to make it 850? What am I going to add here to make it 850? 200. So I need to get 200. Where will this 200 come from? This 200 is now taken away from the 300 units that are here. So it means the balance is 100 units. So let's now distribute. This 200 was brought in at 575. So 575 by 200, tunapata ngapi? 115,000. Add everything so that we ensure we've taken away the 850, which we were told. If I take away 850 in terms of value, what am I taking away? 480,000. I'm taking away 480. I'm taking away 480,000. I add 950. I'm taking away 850. Balance is 100. Then in terms of value, I add 537,500. I'm taking away 480,000. What am I having here? What am I having there? What am I having there? 57,500. So 57,500 is the value of the closing stock as at 17th of February. Can we confirm here in this place here where we are just indicating the units that are remaining, we're able to see that those goods that were brought in on 15th at 575 are what we have in the store. And how many units do we have? 100. Can you take your remaining units, 100, you multiply by the price at which they were brought in? That is 575. When I multiply that, I'm able to see that I'm going to have 575,100, 57,500. Confirm, is it not tallying? 57,500. Units, 100. We've confirmed here. Let's proceed to the next date now. From 17th, we should move to 20th. What is happening on 20th? On 20th, they are receiving 400 units. They are receiving 400 units. At what price? At 565. 565. So when I receive 400 at 565, what is the value? What is the value there? 226,000. 226,000. So this 400, I will add it to the 100 units and get my 500 units. In terms of value, I will take 226 plus 57,500. 226, 57,500. I'm having 283,500. So don't forget, 283,500, you indicate outside here that you've brought in 400. Then I move to the next date. From 20th, the immediate date there is 25th. So I come to 25th. They're bringing in some goods. Of what quantity? 350 at 550. Can someone give me the value? 350 at 550? 192,500. 192,500. Now, in terms of quantity, I've brought in 350. If I add to 500, I'm going to have 850. How about the value? 282,500 plus 192,500. 282,500, 283,500 plus 192,500. What are we having? What are we having? 476,000. That is what we have, 476. Now, don't forget that we've added 350. When I now move to 27th, they're taking away some goods. What quantity? 700. So when I now come to 27, I will not struggle. I know my intended units is 700, but I will come to this point. I'm going to move in this order. So if I want 700, I first of all take the 100 units that have been there in the store for the longest time possible. This 100 was brought in at 575. So I do away with it. That's why I was saying use your pencil in this column. So you do away with what you've taken. Then I need 700, so I'm still lacking 600. Let me come. Will it consume the entire units that are here? Yes. So I will bring that 400. At what price? At 565. Then somebody will give me the value here. Somebody who calculated that is 226. Okay, we are actually taking the entire amount. So it is 226,000. Then let's move to, if we add these two, we are getting 500. Remember what's supposed to be issued is 700. So we are still lacking 200. Can these units here give us the 200? Yes. So that 200 will be taken from that stock. At what price? We look at the price at which it was brought in, 550. Now somebody somewhere will be able to give me 200 by 550. It is 110,000. So I know very well it was 350, but I've taken away 200. So whatever I'm remaining with is 150. Whatever I'm remaining with is 150, and they were brought in at 550. Even before we calculate this to confirm the answer, I know very well at this particular point now, because there is no any other transaction, that is the last date of the transactions on 27th, I know very well that I can get the value of the closing inventory. I know that my closing inventory in terms of units is 150, and that 150 represent goods that were brought in on 25th. At what price? At 550. So let's take 150 by 550. Let's take 150 by 550. Actually, I can see it is the same thing here. 82,500. 82,500. So whatever is remaining is for us to complete this part and to compare. Do we have units of 150? Do we have the value of that closing inventory of 82,500? That is what we are yet to confirm. So if I add the total here, I'm going to have my 700. Then when I come here in terms of value, what do we have? 57,500 to 26,110,000. What are we having? I'm being told we have 380, 393. So whom should we trust here? 393,500. 393,500. That is what we have. That is what we have, or that is what we are taking away. That is what we are issuing. Now, tell me, we add 850, we are taking away 700. The balance is 150. Let me indicate it there. The balance is 150. In terms of value, we add 476,000. We are taking away 393,500. What is the balance? What is the balance? What is the balance? Yes, the balance is 82,500. The balance is 82,500. So I think all of us have seen, if I use my pencil this side here, I can trace these things one by one. And therefore, during issuing, I know what to issue and at what price. I know at this point, I was doing my workings down outside here. I know I'm supposed to issue 150 at 550, 500 at 565, then 200 at 575. These ones remained, and that's what we are now issuing down here. We received 300, we issued 200. So the balance that is 100 will be the first one to be issued. That's what we are issuing here at 575. Then we bring in the 400 units here, 565, still not meeting our expected issue units. And then we now take the balance from what was brought in last. If you can look at what you are doing as the workings, you're able to see that this 150 is still hanging here. It has not been utilized. And at what price? At 550. That is what I transferred here. Now, I want to see if my workings are going to take me to that particular point. When we completed this, we've also been able to see in terms of units, I take 850 minus 700 to give me 150. So it has confirmed this, or this one here, or this one here. What about the value? I know very well that I had 476,000. I've taken away 395,500. If that is done, then the balance here is reconciling with what I have here. So in exams, the examiner will request you to prepare stock ledger using FIFO method. If you know this strategy of doing these things here in this manner, then you'll not miss any question from this topic. Remember, it was not tested in the previous sitting. So what are we doing? We need to do something about this method or this section. Now, as you can see, there is nowhere that I've touched the issuing price that is given there. You're able to see under issues, the goods that were being issued, there's a price indicated there. There's a price column indicated there. I've not even looked at it. I've not even looked at it because the examiner knows very well that these people will be confused. So somebody will be issuing these goods at the price indicated there. No. If you issue them at that price, then it means you are selling. If you sell, the interest of the examiner will be, are you able to get us now the net profit? Are you able to give us the net profit? That will be the next question. Maybe if they give you the fixed cost, or if you're not given the fixed cost, you'll be asked to give us the gross contribution. Are you able to give us the gross contribution in that particular process? Are you able to give us the gross profit before bringing in the additional fixed costs? That is what they will bring. And if that is asked, then you have to use now the prices under issues so that you know the total revenue. Is this concept of FIFO clear? Is this concept of FIFO clear to all of us? Is this concept of FIFO clear to all of us? Is this concept of FIFO clear to all of us? Okay, still under that part, I want us to see how you are going to apply the issue prices. That is what is important to me now, because we've now seen what we are required to do. So this is what I want us to understand. I want us to first of all record total revenue that we are going to receive. Then we take away the cost for us to arrive at the gross profit. Let's now move to total revenue. Total revenue. Remember, revenue is only realized when you sell goods. Revenue is only realized when you sell your goods. Now, if you're going to sell these goods, it is only going to occur under issues. So the first part is we have these goods issued. We have this part where we issued goods and also this section. Under this now, look at the issuing price. We are issuing goods at a given price. This total of 550, was issued at 850. We get it. Then another batch of 850 units were issued at what price? At 800. Then the last batch here is 700 being issued at what price? At 825. So I want you to calculate and get me the revenues on this date, and this one, and then we get total revenue. Are we able to get total revenue? So that's what I want these good people to calculate. Total revenue. So I'm being told total revenue is 1725,000. That is what I'm being told is the total revenue, but I want to get it maybe the first one. So let me see what you are doing here. 550 by 850, what are you getting? 467,500. 467,500. Okay, how about the second one? 680,000. How about the last one? 700 by that? 577,500. So that's the only place we are going to apply that issuing price. And you've seen, we now don't separate them because it is these units that we are issuing at that particular price. If you look at it very well, you'll be able to see that the total amount, even at this point, let's look at it from this point. We are issuing 550, but at these prices. Or we were issuing them from the store at the cost. When we are now going to sell them, we are looking for revenue there. You're able to see that it is now higher than what we have here. So it means in that process, we are creating the element of gross profit. We are able to see now the gross profit element. That one is done. So for us to get the gross profit, we need to get the cost. We need to get the cost of sales. So these goods that we have been issuing are what we were selling. So are we able to get the cost of these goods that you are selling? That is what is now important to us. How do we arrive at the cost of sales? Believing that you've stored your total revenue somewhere. Let me do away with mine, but you'll get me that figure. Let's get total cost. For us to get the cost of sales, we normally say that cost of sales. How do we get cost of sales? It is opening stock. Opening stock. We add purchases. Then we less closing stock. Of course, in between here, before we get to closing stock, we are going to get the value of goods available for sale. Value of goods available for sale. So cost of goods available for sale. We are going to get that. Then when we now less closing stock, we are going to get cost of sales. We are going to get cost of sales. Now, let us look at it from this point. Opening stock. What is the value of opening stock? What is the value of opening stock? What is the value of opening stock? Not in terms of units, in terms of amount, the value of our opening stock is equivalent to 150,000. That is it. What do? We add purchases. Now, purchases is all goods that were brought in. Those receipts are what we are supposed to add together. So this one here, of course, the first one is opening stock, but here all of them are falling under receipts. So we've taken the opening stock, it is already there. We now add purchases. So on 4th, we brought in 400. This is the value. On 10th, this is the value. On 15th, this is the value. 20th, this is the value. And then 25th, this is the value. So it means our purchases will be the summation of all receipts. 220, 282,500, 172,500, 226,000, 192,500. If you add all that, what are you getting? If we add all that, what are we getting? What are we getting? 1093,500. So I'm being told that purchases is 1093,500. That is the value of purchases. Now, are we able to get cost of goods available for sale? Cost of goods available for sale is opening stock, add purchases. That is the summation of everything in this column. What will be the value of cost of goods available for sale? 1243,500. So if I add these two, goods available is 1243,500. 1243,500 is the cost of goods available for sale. But in the process, we did not manage to sell everything. There were those that were remaining in our store as closing stock. Where do I get it from? Just down here. This 150 remained. This is it. And the value is 82,500. So when I less 82,500, I'll be able to get the cost of goods sold, cost of sales. So what is the cost of sales? 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 1161,000. 1,161,000. So that is the cost. That is the cost of sales. Now, because we've been able to calculate cost of sales and our revenue was up here. Cost of sales. We add revenue. Revenue, was it 1725,000? Was our revenue 1725,000? Yes. So revenue minus cost of sales. Revenue minus cost of sales will give us what we call gross profit. So somebody to post for me the gross profit value. Gross profit, gross profit, gross profit, the difference between revenue and cost of sales, 564,000. 564,000. 564,000. So as you can see, what we are dealing with here is direct. These ones are direct costs. So some cases you'll find that they are asking you to give them gross contribution. So the gross contribution is basically this amount because they are assuming what you have here is variable production cost. Then in additional information, they bring number 3 there because we only add 2. They bring additional information number 3 that fixed expenses, the fixed non-production expenses is equivalent to the fixed cost. They are telling you is 235,000. Now, can you give us the net profit? Can you give us the net profit, assuming that the fixed, this one is not given, but let's say it was given to you. We've assumed that a fixed cost is 235,000. What will be our net profit? What will be our net profit? It is gross profit minus fixed costs or operating expenses for us to arrive at the net profit, 329,000. 329,000. So what we've prepared here, is basically income statement. I did not want to mention it at the start because when you now mention income statement, people are starting to wonder, are we going back to FR? Are we going back to FA? No. That income statement is basically prepared based on this thing. So the revenue we've seen, it is only when we are required to get revenue that we apply the issuing price. If you're just going to prepare the store ledger, that issuing price becomes irrelevant. But I think we've now seen how to apply it when it is given to you in a question. Is that clear to everyone? Is that making sense? Is it now making sense to us? Is it now making sense to us? Okay. If we've been able to understand this, then it means we are now supposed to move. We are now supposed to move to CPA November 2020. CPA November 2020 and look at another question to see what's supposed to be done. So here, actually, even before we move to that, we can now use the same illustration, to work out LIFO, because I have not been able to get a past paper question tackling the LIFO, but I think if we use this information, we'll be able to apply or to get the same. I want us to prepare this using LIFO and even prepare all this and see what will be the effect of using LIFO. One, on the value of closing inventory. That is the main point of interest. Will this value of closing inventory change if we apply a different method? Will our net profit here or gross profit change if we apply a different method? If we apply LIFO, what will that be? If we apply weighted average method, what will that value of closing inventory be? That is what we now need to look at and see the impact of using that. So for my case, I just do away with the figures. The format remains the same. I want us to apply LIFO. I want us to apply LIFO and see how it is going to impact, how it is going to affect, our closing inventory. Our closing inventory. So let's have this. We also do away with this, but I believe you have retained the figures. We are now changing the method. We are now changing the method. We are applying LIFO. Last in, first out. That is what we are preparing. Now, if we are going to apply LIFO, it is last in, first out. The ones that have been there in the store are not going to be touched first until we finish what was brought in last. Now, if you look at what I have here, my opening stock has not changed. My opening stock will still be 300 at 500 to give me 150,000. So it means in the three methods, when applying the three methods, our opening inventory remains unchanged, but the subsequent transactions will now depend on the formula that you are applying. So let's now move to the first thing on fourth. We are being told that they received goods of how many units? 400 units. At what price? At 550. So it means we are supposed to have the value here. What is the value? The value 400 by 550. We are going to have 220,000. So when we receive these goods, it increased the units to 700, and then the value has now increased to 370,000. That is what we have. Some people are still wondering, why are they still the same? The difference is now going to appear when you are going to issue these goods. Let's move to 8. They are issuing goods. How many units? 500 and 550. So if they're going to issue 550, they must consider the method. It is LIFO. The one that was brought in last is the first one to be removed from the stock. So if I'm going to remove 550, then I must look at the stock that was brought in last. Which one is it? The one that was brought in on fourth, because the one available from first has been there for the longest time possible, but we look for the latest. Our latest stock is 400. So I start with taking away the 400 at 550. Then, because the total number of units needed is 550, but I've only received 400 from the last stock. So from that point is where now I can go to the one that has been there. I've depleted the latest stock, so but my total should still be 550. So if I want to maintain the total to be 550, I must now pick that from the other stock. So if I take 150 from 350, my balance will remain 150. That 150 is still there untouched. So the 150 I'm taking to make it 550 was brought in at 500. Tutapata ngapi? What are we getting? 75,000. So this one here is 75. If I add these ones here, what am I going to have? 75, that is 295,000. 295,000. I add a total of 700. I've taken away 550. What will be the balance? The balance remaining in the store is 150. And I want you to compare the two. Is 150, and the difference now is 370 minus 295. 370 minus 295, we are having 75,000. That is what we have in the store. Let's now see. If you check quantity, will be the same. If you check your FIFO, at this point, quantity was 150, the same as this. But now look at the value. I believe they are not the same. The other one was, I think, 82,500. Here we are now having 75,000. Can we trace this back and know if it is actually going to give us 75,000? Here, we still have 150 remaining because this one has been taken. We have 150. This 150 was brought in at 500. Take your 150, multiply by 500. Are you not getting 75,000? You'll be able to see that we have 75,000. So it confirms that the value which you are getting here of the closing stock as at 8th is correct. Okay, let's move to which date? 10th. The next date is 10th. They are receiving goods, that is 500 units. At what price? At 565. What are we going to have as the value? So I indicate that I've received additional 500. What will be the value? 500 by 565. 500 by 565 to 82,500. 82,500 has been received. In terms of quantity, I now have 650. In terms of value, 82,500 plus 75,000. 82,500 plus 75,000, 357,500. 357,500. That is what we have. That is what we have. Now, from that date, we move to 15th. What happened on 15th? They received goods. On 15th, they received goods. 300. They're receiving 300 units. At what price? 575. What is the value here? What is the value? 575 by 300. 575 by 300. We are having 172,500. So we are receiving additional 300. 172,500 we add to what we have here. So when I receive this, I'm going to have 950. In terms of value, 357,500 plus 172,500, 530,000. 530,000. Now, let's move to 17th. What happened on 17th? They are issuing goods. That's now the interesting part. They are issuing 850. Remember our method, LIFO, last in, first out. So when you indicate these things in this column here to the left side, it will be very easy for you to know what to do. If I want to get or take away 850 and my method is LIFO, last in, first out. So I first of all come and eliminate the last stock, which is 300. It has been brought in at 575, 172,500. I move to the next one. I still need 850, but I've only taken 300. So it means this one is now taken away. I come to this part. I take this 500. When I add it to 300, it is still less than 850. But I will take that 500 brought in at 565. Brought in at 565 to give me 282,500. So this one has been taken away. Now, I still need to have my 850. I've only received 800. So I'm still lacking 50. That 50, where do I get it now from? You can now see when I was taking this, I did not take everything. I left 150. When I come to this point, I'm issuing these other ones, and then I'm now moving back to my opening stock. Until whatever has been brought in is consumed is when I will now move to whatever is up here. So I need to add only 50. 50 at 500. That is the price for me to get this. This one I've taken away 50. So whatever is remaining there is 100. 100 by 500 should give me 50,000. Let's confirm if the value of the stock here will be 100 in terms of units, and here we are going to have 50,000. Let's see, because there it is telling me I have 100 by 50 to give me 50,000. Is it 5,000 or 50,000? 5,000. Let's see. So get the total here. Whatever has been taken away is 850. In terms of value, somebody to give me the summation of these three. 172,500, 282,500, 25,000. What are we having? 480,000. I'm being told that it is 480,000. Okay. When I take away 480,000, in terms of units, I'm going to have my 100. It is 100 times 500 to give me 50,000. Now I have 100 here. How about the amount? 530 minus 480. What do you get? 530 minus 480 is equivalent to 50, is equivalent to 50,000. That is when we follow this. But then when we just look at it at this point, I'm remaining with 100, which was brought in at 500. When I multiply these two, I'm able to get 50,000. So it justifies that whatever I have here is correct. Okay, let's move to 20th. What happened? What happened on 20th? What happened on 20th? We are being told that they received 400 units at 565. So they are receiving 400 units at 565. What will be the value? 400 by 565? 400 by 565. What do we have? 226,000. To 26,000 has been brought in. So let's have this 400 somewhere here. We should not forget. Then, if I add 400 to my 100, I'm going to have 500. How about the value? 226,000 plus 50,000 should give me 276,000. 276,000. Is it making sense? Yes, I can see they have been posted there. Then I move to the next date, which is 25th. I received additional goods. So on 25th, I'm receiving another batch of 350. Another batch of 350. I indicate it there. At what price? At 550. So somebody to give me this. 350 by 550. 350 by 550. 192. 500. 192, 500. We add it here. We've added 350. So it means our new stock level is 850 in terms of quantity. And then in terms of value, 192, 500 plus this 276. 192, 500 plus 276,000. What do we have? Yes, what do we have? 192, 500 add to 276 should give us 468, 500. 468, 500. That is what we have as at that date. Even before we proceed to whatever is being issued on 27, we can still verify and confirm. Is it really what we have there? Let's see. In terms of units, I have 400 plus 350. That is 750. 750 plus 100 will give me 800 and 50. That is what I have here. Now, how do I arrive at 850? In terms of price now, I have 100 by 500 to give me 50,000. Then I have 400 by 560 to give me 565 to give me 226,000. Then I have this 350 that was brought in at 550 is equal to 170, 192, 500. Can someone add these three things? Can someone add that? What are we going to have? 50 to 26, and then 468. What are we getting? What are we getting? What are we getting? What are we getting? 50, I think there is visible, yes. 50,000, 226,000, and then 192,500. What are we getting? Tunapata ngapi? 468,500. So it means by applying this, we can independently justify that whatever we have here is correct. 850 is total quantity. Value 468,500. That is what we have. Okay. Let's move to the last date. That is 27. What are they doing on 27? They are issuing goods. In terms of quantity, 700 units. So let's come to this particular point. We want to issue. If you want to issue 700, the latest stock is this 350. It cannot give us 700. So it means we are going to take the whole of it. 350 will be taken away at 550 to be equivalent to 192,500. For us to arrive at 700, we need another 350. So this 350 has been taken away. We need another stock of 350. Where do we get it from? From this point. Is it enough to give us the entire stock? Yes, until we have an excess of 50. So I'll come to this point, take 350 and see the balance is 50. So if I take that 350 to make it 700, it will now be 350 at what price? 565. Then let us get the value. 350 by 565. 197,750. 197,750 will be able to give us a total of 700. And then what about the value there? 192,500. 197,750. 390,250. 390,250. That is what we have here as what is being issued. Let us now check the balance in terms of stock. We add 850, we are taking away 700. So what are we remaining with? 150. That is the balance. This 150, what will be the value? 468,500 minus 390,250. Minus 390,250, we are having 78,250. 78,250. 78,250. That is the value of our closing stock. I want us to justify, I want us to confirm, will it really be that 78,250 or we skipped something? Let's come at this point. 100 units are still remaining. At what price? At 500. So I will have my 100 at 500 to give me 50,000. That's number one. Number two, in this column, I'm able to see that 50 also is remaining here. On 20th, we received 400, but we've taken 350. So we are remaining with 50. At what price? At 565. So 50 by 565. What are we going to have? 50 by 565. 50 by 565. Is it 28 something? 50 by 565. What do we have? 28, 250. 28, 250. And that is what is giving us a total of 150. And then we have 78, 250. So if we do that independently, we are able to see the units here. We are able to see the value of closing inventory here. Compare and check. If you look at the closing value of inventory using FIFO, I want you to give me, in terms of units, you will be able to see that the units are the same. The closing stock in terms of units remains the same. It does not change. But then the value, what were we having here? Was it 82,500? Was it 82,500? Yes. So you can now see the difference in terms of the value of closing inventory. And that's where now management accounting comes in. The management now comes in. They now have to sit down and decide. When we apply FIFO, the closing inventory value is 82,500, which is higher than the value of closing inventory when we use LIFO. So as a management, are we able to get the impact of using LIFO? You can be able to see that our closing inventory, the value of the closing inventory is different, even though the units are the same. So now it is upon the management to look at the effect of this difference in their financial statements and how will it affect them if they're going to do now to pay taxes. Remember, this closing inventory affects their gross profit value. So as a company, how will this help you to manage the taxes you're going to pay based on your profits? So which one are you going to take? Because remember, closing inventory reduces the value of what? Gross profit. If you look at this one here, we add a lower gross profit. If I compare with this, I'm going to have a higher gross profit value. So when are we going to apply this? And when are we going to apply this as a company? So that decision has to be made after coming up with all this. So what I want us to do is prepare the same thing, the income statement extract. Of course, the revenue will not change because what we are going to do is this. When we issued 550, we issued them at what price? At 850. When we issued 850, we issued them at 800. And then we now move to this one here. We are issuing 700 units at 825. If you look at that with what we did using FIFO, that has not changed. Is it clear? The revenue does not change. The revenue remains the same. Whatever will be different is gross profit due to the effect of the cost of goods sold. So let's look at it. Let's look at it from this point. First of all, are we able to get the cost of goods or purchases? Are we able to get purchases? Purchases here is now divided into this category. Opening, of course, is not purchases, but it is there under receipts. On 4th, we received 400 at 220. On 10th, 282,500. 15th, 172,500. On 20th, to 26,000. On 25th, 192,500. If you look at the purchases, it will also not change. The purchases value will not change because we received goods at these prices. We received goods at these prices. Whatever is going to change is only the issuing. So are we able to see that? Are we able to get the value here? Are we able to get the value here with the exemption of 150 because it has its own space? What are we going to have as purchases? What are we going to have as purchases? And now, because we know the format, we can now say sales or revenue is 17,25,000. Then we less cost of sales. Cost of sales, we've said we have opening stock, which we've seen as 150,000. We add purchases. Purchases for us to get value of goods available for sale will be opening plus purchases. What is the value of purchases? 1093,500. What about the value of goods available for sale? Value of goods available for sale. 1243,500. 1243,500. When we less closing stock, we'll be able to get COGS, cost of goods sold. Our closing stock is right down here, 78,250. 78,250 for us to be able to get COGS. So can we get COGS? Can we get COGS? Then we get gross profit. COGS, what is the value of COGS? 1162,250. 65 to 50. 1165 to 50. That is the cost of goods sold. When I subtract that from the sales minus cost of goods sold, should be able to give me gross profit. So what's our gross profit? 559,750. 559,750. That is our gross profit. And remember, we add approximated fixed costs, which was it 235,000? Was it 235,000 the estimated fixed cost for us to arrive at net profit? Let's see. It was 235,000. Thank you. Now let's work it and get our net profit. Net profit will be what value? 324,750. 324,750. So you can now look at that net profit. What about the net profit under FIFO? What was our net profit under FIFO? What was our net profit under FIFO? 329,000. 329,000. So as a company, we are going to pay taxes, and taxes are based on 30% of the net profit. If you look at 30% of this net profit under FIFO, you're going to pay more taxes. If you look at 324,750, 30% of this, you're going to pay less taxes. So as a company, which direction are you going to follow? In the process of reducing taxes, what are other effects of understating your stock value? In short, what are the effects of applying LIFO? Because when you now apply LIFO, you'll be able to see if this good was brought in here. It is the opening stock. At the end of the month, the last day, still we have that opening stock in our store. What do you think will be of its quality? Will it be used? There's high chances that this product will be here until it expires. In the process, it expires. What will the company lose? 100 by 500. They're going to lose about 50,000 in the name of following LIFO. So that's the effect of LIFO. You may end up having a stock or a product in the store until it expires, instead of selling it when there's any demand to clear your stock. So this FIFO gives us a simple way of following. The ones that has been there in the store for the longest time is what is being released, and then we store what was brought in last. If any demand comes, we start with whatever has been there for the longest time possible. So this is what you need to know. Under stock valuation, you need to know how to use LIFO. You need to know how to use FIFO. You need to know how to apply weighted average method. Now, as a good student, you should now apply or work out the same question using weighted average method. Go ahead and even get this part here. Have these estimates and see if you are still able to follow that correctly. If you do that and you get everything correctly, just know very well that these ones here are some of the free marks that are waiting for you. So that is what you are supposed to do under valuation of inventory. That's what you are supposed to do under valuation of inventory. So there's a very important part that is remaining. We need to look at the direct labor and then capture the overheads before we complete this topic number 4. So I think that is it. Unless there's a question. Let's see if that is having any challenging issue. Let's see if there is any challenging issue in this part. That is the November 2020. Let me see. The November 2020 sitting. The November 2020 sitting. They are giving you an interesting thing. They are bringing the same thing. They know very well that people will be issuing goods at the selling price. So what are they doing? They have given you the purchases in terms of quantity and selling price or unit price. Then the ones that are being issued, they are calling them sales. And then you have the issuing price. That issuing price is irrelevant. That issuing price is irrelevant because you should be able to know. Sorry. You should be able to know the price at which you are going to issue these goods. You only issue them. Remember, here we are maintaining the store, the valuation of inventory. Inventory is being valued at the cost. So the difference is only coming about due to the formulas that we are applying. But inventory is valued at the cost. The moment you bring the selling price to multiply by the inventory, you are now moving towards getting the sales or revenue. That is what you are now moving to. So if you look at that question, let's see if they wanted you to get anything to do with profit. So we have November 2020 question number 1A. Where did the fixed cost come from? Okay, that fixed cost, I just said, in some questions, they will give you the fixed cost. Of course, it is not there. It is not there. In some questions, they will give you fixed cost if they are interested in making you get the net profit. So I was just preparing you for anything that might be tested from that area. Okay, so we have November 2020, question number 1A. 𝑪𝑰𝑭𝑨 Limited is a manufacturing firm operating in the textile industry. The company recorded the following transactions in relation to product BT during the month of January 2020. So we have the dates there, purchases, additional information. The opening inventory of product BT on 1st of January 2020 comprised of 9,500 units purchased at a cost of 135. So if you look at 1st of January, they purchased some goods. The same 1st of January, we have opening stock. This is my appeal to you. We have 2 transactions happening on the same date. How to deal with this might be a challenge to some of you. This is the simplest way of dealing with that. Just the double the double transaction. That is what I want you to maybe to see. The double transaction, how to deal with the double transaction on the same date. We have opening and then we have purchases. Before you purchased, you add opening stock. So you first of all complete the transaction of opening stock, which we are being told is 9,500 at 135. Somebody to give me this figure. 9,500 by 135. November 2020. Of course, the CPA intermediate. Question number 1A. We have 120. 12,82,500. 12,82,500. That's what we transfer. You first of all complete that transaction. It is there in the store. 9,500 at 12,82,500. You are through with the opening stock. There's no harm of bringing in another 1st of January. Now you bring in the goods that were purchased. They purchased 12,000 units at 150. Somebody to give us the value. 12,000 by 150. 12,000 by 150. Is it 1,800,000? Okay, that is what was purchased. Now you bring it here. 12 plus 9,500 should be 21,500. Is it? Is it 21,500 in terms of units? Is it 21,500? Okay, how about the value? 12,82,500 plus 1,800,000. What are we getting? What are we getting? 30,82,500. 30,82,500. By doing this, by just doing that, you have your full marks for the transaction that happened on 1st. Split the 2. Split it into 2. Split it into 2 in this manner, because the examiner will be able to see you are dealing with opening stock first. You are bringing in whatever was purchased on 1st to give us this. So if you're going to close the transaction on 1st of January, this is what we are going to have in terms of value, in terms of units. So you don't have any issue of reconciling the two transactions on the same date. They now proceed to other dates. So they are telling you that opening stock is already given there. Second additional information, on 9th of January 2020, the company reported a shortage of 300 units. The company reported a shortage. They went to the store and physically counted the goods. They were lacking 300. These 300, either they were sold without being recorded or they were stolen. So if they are stolen, what did we say? This is the space. They have been issued. Remember, issuing here is a general term. It can be issued in terms of sales that was sold, damaged, returned outward, or stolen. So all this, if you see this term, it was sold, it was damaged, it was returned to the supplier, or it was stolen, all of them will fall under this space of issues. So that additional information number 2 will be recorded here. Then on 3rd, and remember the price we are going to use, yes, we have 300 being issued. Somebody is wondering, then what about the price? They are not telling us the price. What am I going to use? What you are going to use here is dependent on the method, which is given on 19th January 2020, 600 units of the units sold on 17th were returned by the customer. Customer is now returning back the goods. Here, we are only dealing with cost. not selling price. So if they are returning back the goods, at what price are we going to receive the goods? At the issuing. When you are issuing those goods, how much did you use to issue the goods? If they are being returned back, they are being returned to you at the issuing cost. You are not going to get profit or loss. Neither the purchaser or the customer will get profit or loss. They are going to get zero profit, zero loss, nothing. No loss, no profit. You have to take care of that. So additional information number 2 and 3, testing what we did. Our first question actually had, our yesterday's question had return inward and return outwards. And they're also referring to the dates. So I believe we've now seen what is going on. Then required a store ledger account for the month of January 2020 using FIFO. First in, first out method of inventory valuation. Then the value of closing inventory. When they tell you, somebody's now wondering, this one here, the all of this is the store. This one here is the stock ledger. When they want now, they want you to get the stock or the inventory. When they tell you the Roman 2 of that question, somebody's wondering, what is this now? You are not taught anything. How do you record transaction on the 9th? I think I've just said that. Let's see. Let me just see if I can give a demonstration, but I would really love you to do this and then we mark it together. So on 9th, company reported shortage of 300. I think I've explained that here. Then on 19th, 600 units of the units sold on 17th were returned by the customer. So it means they issued some goods. On 17th, they issued. How many goods did they issue? 500. Let's say 5,000 at 2. This 210 is irrelevant. You look at this 500 or 5,000 and our method is, they are saying FIFO. First in, first out. So the goods that have been in store for the longest time possible. That's what you look at. Then you indicate the price here. Then on 19th, we are being told that the goods that were sold on 17th were returned by the customer. When you are issuing these goods on 17th, this price here is what you apply to receive those goods back. The 600 units that are being returned are received at this price X. At that price X. Valuation of inventory. Remember, we were saying that here we add 50 and here we add 100 units. I was telling you to have this because when they now ask you to answer Roman 2, the value of the closing inventory, you will explain to them or you just come and indicate on 1st of February 2020, we have 100 units remaining that were brought in at 500 to give us 50,000. Then on, is it 20th? I think this one is 20th. Yes, on 20th of February 2020, we had 50 units remaining, which were brought in at 550 to give us 25 to 50. Then we have total of 150. Yes. Then you get 78 to 50. So this is what they want you to do in Roman 2 of that question. That is what you are required to do in Roman 2 of that question. So I think that's enough for today. Next week, we are going to do direct labor and then complete this particular topic. So thanks for your time. Have a blessed weekend and let's meet next week. The video will be available 2 hours